Picture this, it's 1911 and Procter& Gamble is struggling to sell soap in a cluttered market. Then someone has a crazy idea, make a floating soap. Ivory soap becomes synonymous with purity and fun. How did a simple soap leap from commodity to legend? That's the magic of brand equity, a treasure most managers chased but barely understood. What if you could unlock that secret before your brand fades into the background? Brands aren't just logos, they're secret vaults of value companies often ignore. David Aaker shows why brand equity is the invisible engine behind fierce customer loyalty and pricing power. Ivory soap's floating feature was no accident. Procter & Gamble famously promoted it as 9944 100% pure and literally made it float so kids loved it in the bath. This clever twist created unique associations, purity, fun, trust that turned a mundane commodity into a cultural icon. And guess what? That's the kind of equity few brands achieve. Think of brand equity as a treasure chest. Inside are 5 gems: brand loyalty, name awareness, perceived quality, brand associations, and proprietary assets like patents. This chest fuels premium pricing and customer devotion unswayed by price cuts. Rip one gem out and the whole chest's value starts to crumble. That's why short-term hacks are dangerous. Many brands wreck their own treasure chests chasing quick profits. Aaker points to beer giant Schlitz, which slashed quality for mass appeal. The result? Consumers dumped Schlitz for competitors. Fast gains destroyed decades of built trust and richness. The lesson: respect your brand like a fortune or risk losing it for good. It's easy to say brand equity, hard to grasp it. Aaker breaks it down with 5 core assets. Understanding these is your brand's blueprint for survival and growth. When Japan's Datsun struggled with a tired, cheap image, Nissan didn't just rename the cars, they reshaped the entire brand experience. New marketing, fresh dealership training, and consistent quality finally lifted Nissan into a premium league. The shift proved brand equity isn't built overnight, it's an orchestrated dance of perception and reality. Brand associations are like mental bookmarks. Imagine your mind tagging a brand with cues: luxury, reliability, or fun. These mental shortcuts mean customers choose without thinking, driving loyalty and premium prices. Aaker reminds us brands aren't just products, they're networks of associations uniquely built over time. Customer loyalty might seem intangible, but it's the heartbeat of brand equity. Loyal buyers not only return but evangelize your brand, they forgive missteps and pay more willingly. Without loyalty, all marketing bells and whistles fall flat. Building it means nurturing trust, consistency, and emotional connection. Aaker warns, most managers neglect guarding brand equity, trading it for short-term wins. Companies with dedicated brand equity roles prove the value of protecting these intangible riches. Colgate-Palmolive created dedicated brand equity officers to track and nurture their biggest assets, brands. These guardians monitor awareness, quality perceptions, and competitive threats constantly. By institutionalizing brand care, Colgate avoided costly missteps, keeping their brand strong across diverse markets and generations. This foresight paid in billions, not just market share. Think of brand equity managers as doctors for your brand's health. They diagnose, prescribe, and prevent diseases like brand dilution or careless price wars. Without them, brands drift into quick fixes and erosion. Aaker's call is clear: managing brand equity isn't optional, it's survival. Ignoring brand health leads to disastrous consequences. Schlitz, for example, rapidly lost market leadership when quality dipped. Undoing that damage took years and billions, and some trust never came back. Neglect turns brand equity from a golden asset into a hollow shell, vulnerable to disruption and death. Remember that floating ivory soap? Its magic wasn't magic at all, it was thoughtful brand equity in action. David Aaker teaches us brands are fragile yet powerful assets that need strategic care. So try this: identify one unique association your brand owns, then double down on protecting and growing it every day. That's the real secret behind legendary brands. Subscribe for more book summaries like this one.